The economy is built up of consumers, businesses, and investors, but the bad news is sentiment is absolutely cratering for all three of those classes. Just this morning, we got an update on the consumer sentiment survey that comes out of the University of Michigan, and to the surprise of absolutely nobody, consumer sentiment absolutely cratered again, down 11.9%. from just the prior month of February, and down 28.2% from 12 months ago, March of 2024. The big deal for the markets, though, is the fact that inflation fears drove much of the downturn in this consumer sentiment survey, where respondents now expect inflation a year from now to run at 5% and 5 years from now run at 4.1%. Now, I have a gripe with the University of Michigan sentiment survey. And honestly, I don't know why the markets pay any attention to this. This survey is completely bogus because it's 100% politically driven. One of the first questions you're asked in this survey is, are you Republican, Democrat, Independent, or prefer not to disclose? And, well, I'll share with you why that's a problem. You know, whenever you present that question to somebody, that's going to skew their answers. And here's the data that shows it. Democrats in the survey expect 1 year ahead inflation to be 6.5% and 5 year ahead inflation to be 4.6%, which is up from 2.7% prior to the election. And the opposite's also true. With Republicans, they expect inflation to be basically non-existent, with 1 year ahead inflation at 0.1% and 5 year ahead inflation at 1.3%, which is down from 3.4% pre-election when Biden was in office. So this here tells you that this survey is completely 100% politically driven, yet the markets somehow find value in what this survey is telling us about inflation expectations. It makes no sense. This is a survey that I just want to throw in the trash can and never look at again. Now, I'm not saying that sentiment hasn't fallen, because it most certainly has. We can look at a better index, in my personal opinion, the CCI, or the Consumer Confidence Index, that comes from the Conference Board. And this historically has been much more representative of the overall economy and, well, confidence and sentiment of consumers. And, well, the Consumer Confidence Index has actually held pretty steady, over the last 4 or 5 years. It's kind of been stuck in a channel. Yeah, it's towards the bottom of that channel right now, but it has not seen near the downturn that the University of Michigan's Consumer Sentiment Index has shown us, which, again, I think is completely bogus. But above all, I like to look at the New York Fed and the Atlanta Fed's consumer expectations for inflation. Again, these are much more in line with reality. Yet the markets don't pay much attention to these two surveys. They pay all attention in the world to the Michigan survey, which is a mistake in my opinion. But you can see the New York Fed survey shows, 1 year ahead inflation. I'll just pull it up. Yeah, it's increased to 3.1%. But the 3 year has increased to 3.0%, and the 5 year has increased to, well, barely 3.0%. Very little movement there in inflation expectations because, shocker, this survey isn't politically driven. Another one we can look at, again, out of the Federal Reserve Bank of Atlanta, yeah, it shows somewhat of an uptick in year-ahead inflation expectations to 2.5%, but that's much lower than what the University of Michigan Sentiment Survey is telling us. But the markets don't care about the data that actually matters and isn't, it's not impacted by politics for whatever reason. But again, this just opens the door to opportunity for keen investors. I like to consider me and you guys that watch this channel somewhat savvy, somewhat keen, take advantage of these opportunities. But let's talk about it. Why has sentiment fallen? I think partially it's because of inflation, but more so than that, I think it's just Trump's rhetoric. Literally, the leader of our country, the leader of the United States of America, has told the citizens of the country that there will be short-term pain. So it's only natural that sentiment is going to fall if the leader of your nation is telling you that there's going to be pain. Now, the side of the coin that the markets conveniently aren't focusing on is that Trump can get away with that rhetoric for a very, very short amount of time, but eventually he has to start talking positively about the economy and the growth and the stock market. Otherwise, he's going to lose ground in the midterm elections. And I want to read you something directly from my notes here and try and follow along because, I don't think you'll be able to. I'm going to get lost even reading this to you. So this talks about Trump's tariffs on Canada and Mexico alone. This is another reason why sentiment is going down the drain. There's so much uncertainty out there, and after I read you this, you'll understand why. Here we go. On Inauguration Day, Trump said tariffs would be implemented on February 1st. Then it became February 4th. Then they were delayed by another month. Then later, another month to April 2nd. But then Trump reversed course and said March 4th. But then on March 3rd, the Commerce Secretary Lutnick said that it was possible the tariffs wouldn't go through at all. But then Trump said on that same day that tariffs would happen. And then tariffs provisionally came into effect on March 4th before they were delayed on March 6th to April 2nd. So now all of a sudden the D-Day, is April 2nd. That's impossible to follow along with. How in the world are the markets supposed to price anything in when there's this seesaw action with what Trump is doing and how he talks about tariffs? It'd be much better for the markets if he just came out and said how it was going to be and stuck with it. Whether that's being more flexible or whether that's, playing hardball. The markets just want to know so they can start to price in certain events. But right now there is so much uncertainty. But the positive thing with that is usually, when the markets are highly uncertain, it ends up being a very good buying opportunity. But anyways, all of this negative sentiment has caused a massive risk-off movement in the stock market. Chances are your portfolio has taken a significant hit since Donald Trump was inaugurated, even since the end of 2024. We can look at Tesla, down 45% since December 17th. Or we can look at Palantir, another popular retail investor stock, down 32% since February 18th. And right alongside that, the AI trade has kind of been destroyed. And I have this chart. I'm going to put it up on the screen for you. Semiconductors no longer trade at a massive premium to the rest of the S&P 500. Their multiples have now matched the S&P 500. So any sort of bubble that was forming with AI has now just been erased in just a matter of weeks, which is actually another very bullish indicator. If optimism gets checked along the road, AI is going to be a great thing over the next decade. It's going to be a tremendous productivity enhancer for consumers and businesses and even investors. And if that optimism keeps getting checked along the way, that prevents a massive bubble from forming and a massive fallout, from following that bubble forming. But anyways, I want to give you one more example, and that's CleanSpark, a Bitcoin mining company. So this is about as risk on as you can possibly get in the markets outside of buying call options or put options on CleanSpark. If you own CleanSpark stock, you are down 60% since the end of 2024. Risk has officially left the system. Nobody wants to be invested in anything risky because of the uncertainties, the fears, and the doubts with the economy right now. But I think the markets are focused on, they're entirely focused on one side of the coin, and they're completely ignoring the other side of the coin, which I think presents tremendous opportunities to, again, those keen investors that recognize it. Right now, the economic data we're getting is actually very, very strong. We have a very strong labor market where layoffs are historically low. Now, hires have also slowed down, but that's just the tightening of the labor market. And we can look at initial unemployment claims or continuing unemployment claims or the unemployment rate and see that we are at historical lows. That's very bullish for the economy. And wage growth has been very bullish for the economy, and there's no sign that's going to really slow down. We also, everybody talks about how all of the revisions in economic data are revised downwards because they don't want to report bad numbers. So they revise them behind closed doors when they think nobody will notice. But that's not really the case because just yesterday, real GDP for Q4 of 2024 was revised higher. Have you heard anybody talk about this? Probably not. Probably not, because sentiment is in the dumps and nobody wants to talk about things that are going well for the economy right now. It doesn't get the clicks. But I'm here to tell you that this stuff is happening. It's going on right now. The economy today is very, very strong, and it's only the sentiment that we're getting from businesses and consumers and investors that's really going down the drain. So we're in a very interesting time period. The economy is strong, yet people are very, they feel really bad about their future because of all the uncertainty and the fear and the doubt right now. But one thing's very important. Sentiment can crater, but it really only matters if it shifts behavior, if it forces consumers to stop spending and start saving, if it stops businesses from investing and they start saving, if it stops investors from investing and they start saving. That's the only time it really matters, which that's in the range of outcomes right now, but I think that's highly, highly unlikely. And let me tell you why. This is exactly what I'm talking about. Everybody right now is focused on all of the cuts to fiscal spending. It's true. Fiscal spending has been a very big contributor to economic growth over the last 4 years. All of a sudden, we're cutting it. Donald Trump wants to cut fiscal spending. Well, obviously, the economy has to fall if that happens, but nobody's paying attention to the other side of the coin where, there's been trillions of dollars of private sector investment announced since Trump was inaugurated. So that private sector investment should more than offset any cuts to fiscal spending. Again, markets don't really care about that right now. Well, I can give you another example of this. I have this written in my notes here. We're focused on how this supposed, action day, whatever they're calling it, April 2nd for tariffs, how supposedly that's going to increase trade barriers at a never-ending pace. Tariffs are going to keep going higher forever and ever and ever. It's going to be a never-ending war of higher and higher prices. Again, the markets are kind of losing their minds. That is simply not even remotely, I'll say it's not even remotely possible. Like tariffs or not, foreign nations simply cannot afford to lose access to the United States consumer because we have the strongest economy in the world. We have the strongest consumer in the world, and it's not even close, and it's been that way for decades. These foreign nations they simply can't afford to lose access to our consumer and our economy, which more than likely means that at some point, trade barriers are actually going to come down. New trade deals will be signed. And what do you think the markets are going to do if they're pricing in trade disasters and all of a sudden deals are getting signed? Well, all of this downsides it's going to start to bounce back very, very quickly. Again, the markets are focused on one side of the coin and they're ignoring the other, I think, more likely side to the coin. Another thing that the markets, they're not paying attention to at all right now is the fact that most of the key components in the 2017 Tax Cuts and Jobs Act, they expire at the end of 2025. So at some point, Trump's going to start talking about passing a fiscal package to replace those key components that are expiring. And when that happens, well, that's fiscal stimulus that all of a sudden enters the news wires, enters the news cycle. Again, going to be bullish for the economy and, bullish for the stock market. But nope, markets don't want to pay any attention to it right now. And I don't really get it. You have all these people saying we're entering a recession, but they forget the Federal Reserve has the ability to cut interest rates right now. The Fed put is active. Investors are getting spooked by the Fed saying we're in no hurry to cut interest rates, but that's quite different from the Fed saying we're in no hurry to increase interest rates. They still have a dovish tinge or a bullish tinge to their behavior and the way they're looking at the economy right now. Clearly, they think interest rates are restrictive right now, but they're saying, we're in no hurry to lower them because the economy remains strong and, we're a little uncertain how tariffs might impact inflation. It should be a one-time transitory increase, but we really don't know. That's what's going through the minds of the Fed right now. But if something truly recessionary pops up, they have the ability to stimulate the economy by cutting interest rates. And our economy has avoided a recession despite interest rates going from 0% to 5.5%, despite Sentiment, similar to now, tanking in 2022. Despite it being the most anticipated recession of all time in 2022, that didn't happen. But people think that a recession's going to happen now. And don't kid yourself. Don't kid yourself. You know, who's fooling who? Trump says he doesn't look at the stock market. All right, let's see when the stock market starts to go up in the second half of this year. I can guarantee you Trump's going to point to the stock market and say, look, I did that. He's looking at the stock market. Who is fooling who here? And again, I said it earlier, he simply can't afford to lose ground in the midterm elections. And, well, that election cycle is going to be kicking off here very, very soon. This rhetoric of short-term pain for long-term gain, that's a tough sell to American consumers. And he won't be able to keep selling that for very much longer. Now, if you're worried about the inflation side of things, people like to point to tariffs right now. I've covered it probably a dozen times on the channel. Go back to 2018's inflation data, and you'll see that tariffs had zero impact on consumer prices, or at least very minimal impact on consumer prices, because businesses struggle to pass on price increases to consumers. We like our cheap goods. And, well, if you have two businesses that produce the same good and one passes the cost on to the consumer and the other eats it in their profit margins, well, the one that eats it in their profit margins is going to take all of the business from the other company that chose to pass on the extra cost. It's the way our economy is set up. It's actually very beneficial. So inflation caused by tariffs, I just don't see it right now. And if you're worried about inflation, look at the price of oil. If you really have an embedded inflationary problem, it's going to come from crude oil, and it's going to come from wage growth that just runs away from us. And neither of those things are even close to happening right now. Crude oil is at $67, which is close to its 4-year low. 4-year low. And oil prices feed into everything in the economy. Unless oil prices absolutely skyrocket, I'm talking $110, $120 per barrel, this really is not an issue. So to wrap this video up, all of the euphoria that was in the market has now been wiped out. We are completely in risk off mode. Anything that's risk on is getting sold off day after day after day after a day. I believe that now until April 2nd is going to be prime. I'm going to say it, and this is kind of risky for me to say, but I think it's going to be prime buying. It's going to be a prime buying opportunity for investors. And me personally, I think it's going to be a great opportunity to buy call options and sell put options. We have had extreme volatility, which means put options premiums have skyrocketed. So sell some puts. Earn yourself some premium. Worst case scenario, you get to buy stock at an even cheaper valuation, or buy call options. As a result of the downside volatility, well, the premium in call options has been squashed. You can get tremendous deals on LEAP options that expire in 2027, and that's exactly what I'm looking at doing for the members exclusive portfolio. If you want access to that portfolio, hit the Patreon link in the pinned comment down below. There's a ton of other perks you get as well, and I think it's the cheapest membership on YouTube. That's not because I don't think I provide you value. I just want it to be affordable for everybody, and you get to support me, which I greatly appreciate. Now, when do I think the markets are going to bottom? We were right about the most recent bottom. And then in the Discord, the members Discord server, I talked about at the beginning of this week how I thought the markets would actually sell off at the end of this week. And that's exactly what happened. I think April 2nd, give or take a few days, is going to be another short-term bottom. That just seems like it's going to be peak uncertainty, where after April 2nd, the markets should generally know what the future holds for tariffs. And at that point, any news that comes from tariffs should lean in the bullish direction of trade deals being signed, or initial conversations around trade deals being signed are happening and we're hearing about it. That's definitely going to be a bullish shift that happens, in my personal opinion. I could be wrong. I always say it. I don't have a crystal ball. I just do my best. If you guys are new here or not yet subscribed to this YouTube channel, I would greatly appreciate hitting that subscribe button down below. Hit that like button and leave me a comment. I love seeing all the new faces pop into the YouTube channel. Thank you guys so much for watching. Have a great rest of your day. Stay blessed. Keep 10 toes grounded and chin up. Peace out.